Economic Community of West African States, ECOWAS, was established May 28, 1975 as a regional trade organization comprising countries in the West African sub-region. The aim of setting up the community was manifested in its original treaty. According to provisions set out in the Treaty of Lagos and later the revised treaty in 1993, the objectives were to promote cooperation in economic, social, and cultural activities towards a desirable establishment of an economic and monetary union through the total integration of the national economies of member states. Inherent in the letter and spirit of the treaty were the ideals to raise the living standards of the ECO citizens, maintain and enhance economic stability, foster relations among member states, and contribute to the progress and development of the African continent in line with the principal provisions of the African Economic Community Treaty under the African Union. Within 4 years of the operationalization of the treaty, it became clear that as laudable as it sounded, the goal of achieving total integration of national economies of the constituent countries will require more concerted effort and commitment. Hence, the 1979 protocol relating to free movement of persons, goods, services, and right of establishment was conceived as an instrument to enable free movement of ECOWAS citizens within the sub-region. Loaded into the protocol were the goals of institutionalizing a single regional socio-economic space, providing ECO citizens with opportunities in member states, including the utilization of arable land by indigenous agriculturists, access to coastal areas by landlocked member states, employment of English and French language experts, and most significantly, unfettered access to natural resources by member states. In a nutshell, the protocol was intended to create a borderless West Africa. In creating a borderless West Africa, the region was expected to eliminate between member states custom duties and other charges of equivalent effect on imports and exports. Today, that is not the case at the borders. It was also expected to eliminate quantitative and administrative restrictions on trade among member states, to establish a common external tariff structure and commercial policy towards non-member countries, and eliminate obstacles restricting the free movement of persons, services, and capital between member states.
I believe that this is the fastest way for us to realize some of those treaties, protocols that have been signed since 1975, when ECOWAS was formed. It is only through the sea that this issue of free movement of goods and services, of course there are several other initiatives that we're looking at. We're looking at the Borderless Alliance, which we're a major partner. But we believe that if we have an efficient sea-going vessel that can carry 20 containers at once, rather than carry them by road in 20 trips, then we'll be able to increase the level of trade flows within the sub-region. But why it has not been increasing is that traders within the sub-region are suffering. If you have five containers, you have to make 5 trips. So that was why we have to come up with that. And if we look at the operating model of other Exim banks in the world, it was the same. Now, every other person was coming to West Africa or coming to Africa. Every other Exim bank coming here to set up their own regional or branch offices, because this is where the margins are. And exporters within the sub-regions were leaving all these huge potentials, all these huge opportunities, and then delving into markets that did not have any competitive advantage.
The revival of interest in regional integration in recent times and cooperation is a worldwide phenomenon and inspired by the success of European experience. It also reflects a growing appreciation of the benefits to be derived from regional unity and cooperation in meeting the challenges posed by increasingly competitive world markets brought about by globalization. In ECOWAS countries, the regional aspirations are shared by the community, statesmen, intellectuals, and citizens alike, reflect a general desire to break the confines of individual nation-states and a denial of all the things that divide the region, including the multiple barriers to the free movement of goods and services, people and capital among the countries in the sub-region. These regional aspirations constitute a response to the manifest incapacity of individual member nations of the community to generate the required development. It does indicate a search for solution extending beyond what existing nation-states appear capable of providing. Regionally, ECOWAS countries are still divided by a wide range of institutional, historical, legal, and infrastructural barriers. At international level, the region is marginalized along with other developing countries from enjoying the benefits of globalization. The expansion of internal community market of ECOWAS is one of the necessary conditions for the promotion of the region to investors. The benefits which may accrue from harmonization of regional investment policies towards a community code include increased investment flow into the region, enhanced productivity, employment generation, as well as reduced incidences of corruption. In West and Central Africa, an efficient coastal sea transport system has been identified as a complementary transportation solution to congested road transport systems, existing shipping lines, and airlines' inability to meet existing demand for transport infrastructure and services. The lack of adequate transportation among states in West and Central Africa makes the cost of transporting people and cross-border trading quite prohibitive. These costs are a barrier to regional integration and free movement of persons and goods in the sub-region. Presently, the cost of shipping goods by sea along the coastline is prohibitive because in many instances, goods between West African destinations are transshipped through Europe or South Africa because of the non-existence of direct coastal sea links. Costs that are related to excessive transit time make African exporters non-competitive. These constraints make West African transport and logistics costs one of the highest in the world. Therefore, the need for Sealink Project, which will employ modern, secure, multi-purpose vessels that carry passengers, freight, and vehicles. It will take advantage of modern communication to assure passenger safety and the sharing of information relating to shuttling. It will also offer the combination of passengers and cargo, which is an attractive proposition to women traders, in particular, who are more comfortable accompanying their goods. Maritime transport derives its competitive edge by its capacity to carry larger cargoes than trucks and airlines at less cost. It will also create a profitable private sector corporation capable of delivering excellent cabotage services to West and Central Africa on a regular, reliable, scheduled basis. The project will open initial service at 10 ports with combined passenger and freight services. It will develop inter-regional trade based on market demand. It will offer ease of market accessibility and respond to the growth of regional markets' food security aspirations and provide greater mobility of goods, persons, and services. The management structure is simple. It is a private limited liability company managed by individuals with extensive international experience in cabotage. It is structured to incorporate an internationally recognized technical partner capable of managing the routing, maintenance, and other technical matters relating to business.
It doesn't make sense that for us to send a container from Nigeria to Ghana, for instance, will take you about 45 to 50 to 60 days. How do you deepen the regional trade? Other economic blocks in Africa have gone very far. West Africa seems to be one of the regions that has the highest transport and logistic cost. But what do you look at them? They are not challenges, they are opportunities. That was how Nexim Bank said, look, why don't we find a way of facilitating the setting up of a shipping company that will be private sector driven, because it's the private sector that is trading. And when we ask our consultants to go around, they now met with the officials of the Federation of West African Chamber of Commerce and Industry. And the people shouted that this was a fantastic initiative. They were going to work with Nexim. We asked our consultant to go to Cameroun. Cameroun is not a member of ECOWAS because our initial concept was that it will be limited within ECOWAS. And when they went there, they now met with one of the biggest logistic companies in Central Africa called TRANSIMEX. They were at the point of procuring some vessels for their logistics operations. And they were happy with this initiative. That was how you now have Nexim, you have TRANSIMEX, you have FEWACCI coming together to set up a special purpose vehicle that will drive the realization of this initiative.
The reason why the Sealink is very simple. You see on the roads many trucks. You see the delays that these trucks have. You see the harassment people go through from one border to another border. Sometimes the trucks can spend 3 to 5 days, 7 days in one border. And if you add a corridor, Lagos, Abidjan, and see exactly how many will that be. Now, we say that we want regional integration, and we need the infrastructure to do so. We are talking about the rail. It takes so long for a rail to be realized. We're talking about building a roads. It takes also a lot of money to do so. So the private sector says that in order for us to move our goods, let's find an alternative to the road and also to the rail that is there to be waited for another 10 years maybe. And we came to say that why not try the transportation by sea? One truck can take 1 container or 2 containers. A ship can take up to 500 containers. And it only takes from Dakar to maybe to Libreville about 5 days. Now try to do that. If the last time the export trade of Nigeria wanted to move a container from Lagos to Douala, they asked them 3,800 euro, and they told them that it will take 6 months before they arrive, which journey you can do in 1 day. These are the reasons why we are looking at the Sealink. We have different dimensions. When we started the Sealink, we look at the market of the Sealink. And we say that who move the goods in West Africa? They are all women predominantly. 70% of the market is the women. How do they move? The women move with their goods from one place to another place. So we say that we can just use the cargo ship because we have a culture of moving with our goods. So the selection of the ship was very vital and critical. So we have a combination of goods and passenger that is a combo ship for these women to be able to move their goods from one area to another. And even if we look at also the problem of food security in West Africa and in Africa in general, some of the places have surplus, some have deficit. And where you have surplus, the food is getting rotten. And what do? Is on the floor. Now what we're trying to do between the deficit countries and the surplus country, if there is this movement, then the problem is solved.
Specifically, it will spur more private sector initiative and innovation, enhance the development of the key sectors, value chain, create and sustain more jobs as the ECOWAS market become one.
The initial funding requirement is about $60 million. And we are saying that 36 will come by way of equity, which is what we intend to raise from this offer. And then 24 will come by way of debt capital. It is interesting to know that banks are already indicated intention to provide this $24 million already.
The project has been endorsed by the federal government of Nigeria through Nexim Bank. It has also been adopted and is being sponsored by the Federation of West African Chamber of Commerce and Industry, with other endorsements and collaborations by the ECOWAS Commission, the ECOWAS Parliament, various multi- and bilateral institutions, including the Maritime Organization of West and Central Africa, strong private sector support through various trade associations, and heightened expression of interest by potential investors both locally and internationally.
Right now in West Africa, we have the highest GDP. Our growth is almost 6.65. No other region, no other economic region in Africa, has that level of growth. And that's to say that we just need to address some of these non-tariff barriers so that we can quickly deepen the intra-regional trade. And the best way to do is how do we move our goods in bulk? And because we know that our people trade with their goods, we are not just getting vessels that we carry under the cargo. We have designed the routes.
What makes our trades and industries more competitive? You go along the West African coast, what do you see in terms of cement? You see Dangote cements everywhere you go. You go to Gabon, you see the yam coming from Ibadan. These are the inter-trade. How much does it cost to do that? The whole of Central Africa, the whole of West Africa, take the spare parts from Ladipo market, because that's where they go and get the spare parts. They use engines at transshipped from this area to all West and Central Africa. The Nigerian traders in Sao Tome, the Nigerian traders in Equatorial Guinea, the Nigerian traders in Libreville, they import this. But the problem is that what? You cannot get ship. The used car factory or land park in Lomé export all over West Africa, export to Central Africa. But they used to do it through Cotonou. But because the condition of the ships that were in Cotonou were not modern ships and they were not seaworthy, there was a regulation to bind them. So now that trade also has been cut. There is that opportunity, a huge opportunity for investors. And that's one of the reasons we want it to be a transnational company, so we can get resources together and we share risk together. Since it asks a lot of capital, it's very capital intensive, and you need a lot of working capital. And by getting together as from business people from different countries in West and Central Africa can leverage themselves and can reduce that risk at the minimum.
The ECOWAS market is huge, estimated at close to 300 million people. And this market has not been fully tapped, and it could be maximally tapped if the sub-region embraces the benefits inherent in the Sealink Project.